The big question right now is easy money around the corner. And before we dive into that, I really want to talk about the numbers. So something that I've seen now for a few weeks in a row is we've seen more homes come off the market than go on the market, or the numbers are relatively the same. And a lot of folks I would think to believe that there's way more homes coming on the market. So as of right now, there were 7,370 homes that came on the market this past week. Now, 826 of those homes were previously on the market, so they came back on the market, and 6,544 of those homes are new listings. Now, when we drop down a little bit more, you can see that 7,810 homes came off the market. So not that much more, but more homes came off the market, whether it be a sold listing or an expired or a withdrawn or something of that nature. But the great thing is, and I say this when I say the great thing, I mean the good thing is we're not seeing inventory continue to pile up. And that's good for most sellers. Not so great for buyers, but it's good for sellers. It's keeping us in that neutral market. We are not in a seller's market. We're not in a buyer's market. We've been very much so in a neutral market for a while. Now, price reductions. We saw a ton of price reductions. That's kind of been the theme. And it's just sellers pricing up way too high. Now, I touched last week where a lot of sellers felt like if they would have sold during the COVID years, they would have made more money. But if you go back and see what I talked about last week, you'll see that's not the case. For most homeowners, you could potentially sell for more now than you could at the peak of COVID. And I thought that was pretty interesting. I wouldn't have argued that with somebody until I really dove into the numbers. Ooh, dropping our camera here. Now let's talk about the mortgage rate. So the average 30-year fixed mortgage this week did go down a little bit from the previous week. Now this week was a little bit different because I wasn't able to find as much consistency across all the websites. So I saw the current rate kind of fluctuating anywhere from 6.25 to as much as 6.31. Last week we were sitting at 6.32. So the interest rates have gone down a little. Now you've also heard me potentially over the past few weeks where I talk about don't expect large reductions in mortgage rates until hopefully Q3 of 2026. However, we're still going to see it kind of ebb and flow. Something might happen in the market next week, which might make the interest rates go back up a little bit, or something might happen where they go down. Now, speaking about what's going to happen in the market, I watched the NABE Conference last week. I was driving home from Colorado, so I had a lot of time to watch it. It's super boring, but the great thing is you don't have to watch it. You could just watch my videos, and I'll kind of give you the scoop. Now, there was a few things I wanted to take away from that. Now, one, will the Fed drop the rate again in October 29th meeting? I'm going to say yes. Most people are saying yes. It's almost 100% chance that it's going to happen. They'll most likely drop it by a quarter, which is the same that they did in September. Powell said they're going to mirror what they did in September, and I anticipate that they'll probably do the same thing in November and December. But remember, Fed rate reductions don't mean mortgage rate reductions. There's a few indicators out there that people watch. One of them is going to be the 10-year yield. There's a few other things out there that have to do with like the dollar confidence and all that stuff. But the point I'm trying to make here is Fed rate reduction does not always equal mortgage rate reduction. Now, there's another thing I want to pay attention to as well, and there's a potential for an end to quantitative tightening. Now, Powell didn't come straight out and say, hey, we're ending this. He said,
since June 2022, we've reduced the size of our balance sheet by $2.2 trillion, from 35% to just under 22% of GDP, while maintaining effective interest rate control. Our long-stated plan is to stop balance sheet runoff when reserves are somewhat above the level we judge consistent with ample reserves conditions. We may approach that point in coming months, and we are closely monitoring a wide range of indicators to inform this decision.
There's a potential that we're going to end quantitative tightening. Now, if you go back to 2022 in the summer when the real estate market went from just bananas to kind of just stopped in September, well, part of that was because of quantitative tightening, or you might see in like headlines it says QT. They're not talking about the gas station. They're talking about quantitative tightening. Now, as I said, in 2026, the Fed started QT to fight inflation, and they reduced the money supply. So they cut off the printing that they were doing. And last Tuesday, Powell hinted that QT could be ending soon, which means the Fed may shift from quantitative tightening to quantitative easing. Now, what does that mean? It means they're going to potentially start printing more money. So if we have lower rates next year and inflation moves up because of quantitative easing, meaning they're printing more money, what's that going to do to the home values? Well, I think they're going to go up. I thought values would go up this year, and the more I'm doing research on this, we're continuing to see home values slightly go up, regardless of what you're seeing a lot of the headlines doing. And let me touch on this. A lot of the times, the headlines, what they do is they take just a general basis, and when they find something that kind of fits a narrative that they can just push something to get clicks so they can make money off it, they're pushing it out there. Because a lot of these people, when I talk to them, I say, hey, where'd you get that information from? They don't know. Like, they don't watch the meetings. I guess they have a more exciting life that they don't want to just sit there and watch these boring meetings and kind of come up with these conclusions. But I'm telling you, off of the research I'm doing, I genuinely believe that we're going to continue to see home values go up. Now, you're going to get those seasonal trends, but overall, we are going to see home values go up, excluding something unpredictable. Who knows what that could be? But excluding something unpredictable, as long as we keep on this trajectory. Now, I did touch on last week, if you go back, I actually showed you some numbers where home values have actually continued to move up. Now, you've got your seasonal trends, you've got your drop from when interest rates went up, but a lot of folks feel if they would have sold during the peak of the COVID years, they would have made more money than if they sold this summer. That wasn't the case for most homeowners. Like I say, you can go back and reference that video from last week if you'd like to. What caused values to dip back in 2022? Well, we just touched on it. It was quantitative tightening, and they increased the interest rates and they stopped printing money. And now that we move forward to today, what's going to happen with home values? Well, new buyers are entering the market. Both, have individuals, you've got first-time home buyers, you've got pent-up demand from individuals that have been in homes that they want to move out of, but maybe they're rate locked, meaning they have a low interest rate, so it's hard to move out of a 2 or 3% interest rate into a 6% interest rate. If the rates come down a little bit, that's going to eliminate that. So you're going to see more buyers step in the market. You've also got a lot of investors that are still looking in the market. And I'm going to touch on something in a second that I think investors are keeping an eye on. And then you also say there's this whole blockchain thing. Now, the way I understand it, and somebody please chime in that's a little bit more of an expert on this, because this is something I'm not very knowledgeable about, is crypto and blockchain. Now, my understanding is it wants to be backed by something that's tangible. So they might start buying up real estate to back the currency, if you will. And that's where I'm going to stop. I'm going to start sounding like a goofball because I don't know much about that. Now, another thing I think investors are looking at right now is there's a lot of conversation about eliminating or reducing property taxes in Texas. What do you think is going to happen to home values if there's a large reduction or a removal of their property taxes? If you're an investor, so I'll use my rental property. If I have a rental property and I'm renting it out for X amount, well, right now, one of them I've got to cover the mortgage and I have to cover the taxes. Other ones, it's just the taxes I have to cover. So that means I'm going to cash flow more money. So if I had the money right now to go out and buy some properties, knowing that long-term the values are going to go up, but if they remove taxes, my profitability on those properties is going to drastically jump. Well, then I'm probably going to take the gamble if I'm trying to unload money or 1031 exchange or something of that nature. So I think we've got a few different avenues where buyers are going to start stepping in the market, which is going to push the market up. And I personally see long-term upward movement on home prices with those seasonal trends. But at the end of the day, I'd love to hear what you have to say or what your thoughts are on this. Go ahead and make a comment and let me know. Do you think I'm full of it? Do you think there's some accuracy to what I'm saying? Do you think values in North Texas long-term are going to continue to go up? Or do you think waiting is going to be beneficial for you and your goals? I don't know. But anyways, that's the end of the video. I hope you enjoyed. If you're thinking about buying and selling and making a move, I'd love to connect with you. And until next time, I hope you have a great day.